So hi guys, this is SJ speaking, and in today's video let's see about what is base rate. So this is also one of the banking videos. So before going to the video, I'm personally teaching trading. So if you want to join my mentorship course, you can contact me from the number which I've given in the scrolling below. And I'm totally taking 7 courses. Or if you're interested, you can enroll in any one of the 7 courses. So now let's go into the video. So what is base rate? So in my previous video, we saw about benchmark prime lending rate. So it is one of the internal benchmarking lending rates which was used in India. So the base rate came after replacing the benchmark prime lending rate. The benchmark prime lending rate was replaced by base rate in 2010. The RBI brought it in 2010. So usually the banks lend to the customers. So how the lending rate is calculated? So the lending rate is calculated based upon referring to some benchmark. In case of BPLR, usually internal benchmarking means RBI gives some guidelines, standard methodology to calculate the rates. For example, BPLR, RBI gave some guidelines to the banks to calculate how to calculate it. Then the banks themselves calculated the BPLR. But in case of base rate, here also the RBI gave guidelines, but also the RBI gathered the details regarding the cost of funds, the operating cost, and profit margin, and negative carry on CRR and SLR of all the banking sector as a whole. And it took the information from all the banks and took a weighted average for all those values, and it calculated its own base rate. So which is used as the reference by the other banks to calculate their own base rate. So I will explain it. So basically, base rate is calculated by the RBI and also by the banks themselves. So two times. So the base rate calculated by the RBI is taken as reference by the banks to calculate their own base rates. So so let's see the definitions. So base rate is the minimum lending rate below which the commercial banks can't lend to its customers. So this base rate set by the RBI, below which the banks cannot give loans to the customers. Why the BPLR was replaced? Because suppose if the BPLR was 10% means the banks lended on sub BPLR. Sub BPLR means lending below the BPLR. For example, corporates and many other companies enjoyed interest rates of around 3.6%, which is very low. And suppose cross subsidization. This is another concept, cross subsidization. So what is the meaning of it? If the bank wants to earn 10% interest from one person 5% and another person 5%, this is equal. There is no any discrimination. But here, although the bank considers the credit worthiness of the borrower, still it should have some limit. But here, cross subsidization means charging one person very low and charging another person so high. So, for example, 3% and 7%, the banks get the same amount of in profit, but also but 1% is charged. 1% is charged more, and 1% is charged less. So this is the discrimination. So that's why BPLR was replaced by the base rate system. So when this base rate came, the banks can't lend below the base rate set by the RBI. For example, 8% is the base rate set by RBI means for no one the bank can lend below 8% with a few exceptions. And so the base rate is an internal benchmark introduced by Reserve Bank of India in 2010 by replacing the BPLR system. It is calculated by RBI for the banking sector as a whole by using a standard methodology, and this rate is calculated by the RBI is used as reference benchmark rate by the banks to calculate their own base rates. And the base rate system was replaced by MCLR, that is marginal cost of funds based lending rate system, in 2016. Why? Because the base rate system also had many drawbacks. So I will explain later in the video. So how the base rate is calculated? So what is cost of funds? I have explained briefly in my previous video, BPLR. If you didn't watch, you can watch that. So cost of funds means basically the interest expense. Suppose someone is depositing money in a bank, the bank has to pay them some interest. So that is the cost of fund for a bank. Similarly, any borrowings also have the same effect. In case of equity, underwriting fees, it is a cost for a bank. So next comes the operating cost. Operating cost means day-to-day banking operations. For example, salaries to the employees and rent fees and rent and utilities and several other factors. These are all operating costs. Negative carry on CRR and SLR. So I have explained what is CRR and SLR in a specific video. If you didn't watch, you can watch that. So CRR means the RBI has to keep some funds. For example, NDTL, from its NDTL, it has to keep some amount as cash with the RBI, and the RBI doesn't pay any interest on that money. In case of SLR, it has to keep the some amount in its own bank itself in the form of cash or government securities or gold. But usually, in case of SLR, the banks usually keep it in the form of government securities and gold, because keeping it in cash has no value for the bank. So that's why it doesn't keep it as simply as cash. So take CRR. Suppose if the bank keeps a CRR, for example, someone is depositing. Suppose I have a bank and someone is depositing 10,000 in my bank, and I have to give him 5% interest. So I have to give him 10,500. So after I have to pay him 500 interest. But suppose the CRR rate is CRR set by the RBI is 5% means, then from the 10,000 I have to keep 500 as reserves in the RBI. So only 9,500 I can lend and earn money. So usually I lend more than what the deposit interest rate. I lend more than the deposit interest rate. For 6% or 7% I give them loan. But I have to consider the fact that for this whole 10,000 I have to give this 5%, but whereas I'm having only this, so the 5%, this 5% here in this 500 is 25 rupees. This 25 rupees I also have to give it to this guy who deposited. So this value I will add it in this amount. I will lend it at a higher rate. So I have to consider that factor when calculating my base rate. So my lending rate. So that's the fact. I have to take into account. I will take it from the. I will charge that amount to the customer. So negative. That is why negative carry on CRR. Next comes the profit margin. Profit margin refers to the how much profit requirement that the banks need. So usually the cost of funds, the operating cost, and the negative carry on CRR, it all goes outside. I have to pay them. But here the profit margin, that is what I actually earn. This is what my actual profit. Whether I need 2% profit or 3% profit, depending upon my own requirements, I have to take it into account. And usually, what the RBI does, it takes all the it takes the average for this value, this value, this value, this value, the weighted average. Most probably it takes the weighted average for all the banks, and again it takes the average, it collects the values of these four things from all the banks and takes an average of all these values and calculates the base rate. This is the base rate which is set by the RBI, minimum below which the bank can't lend. So this is used as a reference by the other banks to calculate their own base rate. So this is the bank's own base rate. So it will be different for different banks. For Canara Bank, for SBI, it might be different. The base rate might be different. From that base rate, a spread is also added, and this spread is added to the base rate to give the final lending rate. Spread also differs according to the credit worthiness of the borrower, the tenure of the loan. Long-term loans have a tenure premium, and short-term loans have a different tenure premium. Depending upon those factors, those are done. For example, if say for government employee, if my customer is a government employee, if he needs loan, I will give him at a lower interest rate. For example, a business guy comes, means he might have profit or loss in the upcoming year, so I might lend him at a higher interest rate. So this is the spread. So once the spread is added to the base rate, it is known as the final lending rate. So usually the base rate is calculated by the RBI and also by the own bank themselves. So that's the fact. And next, coming into the drawbacks. So what are the drawbacks in case of base rate means? So usually RBI gives loans at repo rate to the banks, commercial banks, and the banks give to the customers. So if the repo rate increases, the bank can increase the lending rate to the customers. If the repo rate decreases, the bank must definitely reduce the lending rate to the customers. But the bank did not reduce the base rates. So the RBI expected the banks to reduce the base rates, but the bank did not reduce the base rates. So this is the inefficient monetary policy transmission. For example, if the base rate reduced by 50 BBBS means basis points means, then similarly the base rate must also reduce by 50 BBS, but banks did not reduce or reduce very less. So this is inefficient monetary policy transmission. So this is very hardship on the customers. The customers need to pay higher interest rates for getting the loans from the banks. So RBI, in order to overcome this, they replaced this base rate system by the MCLR system, that is the marginal cost of funds based lending rate system, in 2016. So this is what the base rate, guys. So hope you got a good clarification about the base rate. So this is one of the internal benchmark lending rate systems. And in my upcoming video, I will explain about MCLR and the EBLR system. So EBLR is currently being, the RBI wants everyone to transfer to the EBLR system, but still the base rate and MCLR system is currently in place. And if you type it on Google, you might see the current base rate of the different banks also, you can see. So hope you guys enjoyed this video. Give a thumbs up, share it with your friends and family, and subscribe to my channel, and also press the bell icon so get notified for all my videos. Press the all button, and if you're interested to join my trading course, you can contact me from the number below. So totally I'm taking 7 courses. If you're interested, you can enroll. And other than that, if you want to open a trading and demat account, I've given you Zerodha and Alice Blue link on the video descriptions on my YouTube all my YouTube videos. You can open it and start trading or investing from today onwards. My channel is not only for trading and investing, it is also for any financial concepts, banking. So if you are preparing for any exams or planning to pursue a career in finance, it will be useful for you guys. Other than that, if you want to listen to my videos on Tamil language, there is another channel known as HJ's Trading School Tamil. So thank you guys. I will visit you on my next video. Until then, bye bye. Take care.